is January 28th. It is 9:12 a.m. here Central Standard Time, and it is Satoshi Saturday. So Griff's such a humble guy, he's not going to tell you, but he did win Rookie of the Year of his company. Dude is absolutely crushing it in outside sales. And so, Griff, we'll put your phone number down in the description so everybody can shoot you a text. But yeah, I just got to tell everybody, man, Griff has gotten after it and has won Rookie of the Year for his company. That's pretty damn cool, man. Congratulations.
Appreciate you, brother. Appreciate the not letting me be humble about it. But me and Nick are Bitcoiners. So honestly, maybe I should be good at sales. Maybe all Bitcoiners should be good at sales because honestly, it's about, I just attribute all the success to our Saturdays and just getting up every week, doing it on Saturday, talking about Bitcoin. And maybe we actually just literally Satoshi Saturday'd our way through a bear market. And now here we are.
Man, I'm telling you, that's what we did. I mean, how many Saturdays did we get up when the price was continuing to go down? And we got up talking about the fundamentals. What is true of Bitcoin? Hey, we're here, baby. We're here for the real deal. We're not just here for a good time. We're here for a long time, right?
That's what we're trying to say. We've been trying to say this.
Lowering time preference, and we are preferring tomorrow versus today so that we can create generational wealth, so that we can create generational impact. Griff, let's hash out some of these Bitcoin stories from this past week, man. Let's get into it.
Bitcoin is booming. I mean, when it comes to Bitcoin mining, when it comes to Bitcoin and legislation, when it comes to Bitcoin and transactions, even this week, things are happening. And it is an attestment to this is all only happening because every 10 minutes, this protocol continues to dispense rewards and people keep mining for it. And I believe it was actually this week we got to our 800 millionth transaction on the Bitcoin network. And it's pretty crazy because this is long before Nick and I even got into Bitcoin. Bitcoin was working. You know, Nick and I are relatively new to the space when it comes to Bitcoiners, guys who just are like, hey, a lot of this is noise. Bitcoin is the only signal. And Nick's 100% right. But Jack Mallers announced that a Clover partnership, which is a payment service terminal that has about 6 million customers. So they will soon be able to actually either you can go there and pay with Bitcoin or you can go there and you can pay with cash or whatever currency the payment terminal is in. It's on a 90-day, 90-day like pilot period, but they're basically going to measure like, well, is this cheaper? Is this like better for my business? If I didn't have to pay taxes on money, so to speak, if I didn't have to pay taxes on the sale of the Bitcoin, well, would this be better for my business? So that was going on. In Nigeria, Bitcoin, we kept reporting on this story. Nigeria limited fiat withdrawals, but they're now selling Bitcoin at a premium in Nigeria. Bitcoin in Nigeria is like $37,000 US because they can't get paper money. So they don't want the government's money. They want to use Bitcoin. Like I had said, Bitcoin legislation is fully underway. The White House, you can say they were fighting it. They truly, if you read that, they just don't understand what's going on still. It seems like Ted Cruz is trying to get vending machines Bitcoinable in Congress. Like that actually matters. Maybe it does, maybe it doesn't. But good for them. I know Mississippi is legislating. Basically, people have the right to own and operate a node in a mine, which if you're an American at all, absolutely. The very minimum, people have the right to do so. So Bitcoin and legislation is fully underway. I know Dennis Porter took a lot of flack for that Satoshi Action Fund, but shout out to the Satoshi Action Fund. Anything you're doing on Bitcoin, in my opinion, is pretty much good for Bitcoin. Why? It's an open network. This is a free country. Bitcoin is free country. You do what you want. You're not going to be able to mess with the constitution of Bitcoin, but you can come in and do whatever you want. You can get on your knees for politicians. I think that they should really be starting to understand the Bitcoin more than anything else. With the debt cycle and pretty much everybody calling out the Fed, how much pressure can the government put on the Fed, Nick, moving forward? I mean, like everybody and their mother is going, well, the Fed sucks, the Fed sucks, the Fed sucks. And it's like, hey guys, like at a certain point, they're going to have a press conference and go, yeah, we're cutting off the U.S. government or like, we can't do this anymore. But anyway, legislation in Bitcoin is fully underway. Tesla never sold in Q4. That was announced actually this past week.
Okay,
maybe.
so fill me in on some of the details on this. Was Tesla supposed to be sold? I didn't know. I didn't even know that Tesla was under
So
some
Tesla famously was accepting Bitcoin for transactions, and then he started doing his whole Dogecoin thing, which
Oh,
really ultimately led to him saying, "Oh, Bitcoin, it's not green enough for Tesla to accept transactions,"
okay.
which is so funny because like it's not like Elon is even in support of that, and Bitcoin is actually, due to a later story I will tell you, is super green.
So you're
But
talking about they never sold their
they
Bitcoin.
never
I thought you
sold
were
what was
talking
on their
about the
balance
company.
sheet. Yes, they
Okay.
had the asset of Bitcoin and a ton of it, and they never actually sold it. Even though I believe it was like reported or somebody said they sold like half their Bitcoin, but they did not ever sell their Bitcoin, at least in Q4. A lot of people moving over to Nostr. A lot of Bitcoiners moving over to Nostr. Lynn Alden, Edward Snowden, all these people moving over to Nostr. So maybe get an NPub key. Maybe this Nostr thing actually is taking off. El Salvador paid back $800 million of debt, something that obviously every
Big.
traditional financier in the world is probably dreading. They were probably hating that. They were probably like, this guy, he's going to default, lose all his money. He sucks, blah, blah, blah. He doesn't. He's probably pretty smart. He's also going to take wasted energy, very green energy, and mine with it. And then he's going to give it back to his people in a bond structure. Do I think that that's the perfect way to do it? Do I think that he's perfect? No. Do I think he's at least the most interesting world leader? Do I think that he might actually be the only politician that's like, like I'm not going to do everything right. Everything about El Salvador is not right, but I'm going to clean up crime and I'm going to fix our money situation. That's about all I can do.
Yeah.
And we'll see if it works. But paying back $800 million of debt is something the United States couldn't even do right now. We're basically like a toddler who just got a credit card and we fill it all the way up to the top and we make that same amount of money a month. So we think that this is like a sustainable thing, just paying it off, paying it down, or just making enough money. It's like, no, you know what that means? It's just this minus this equals, oh, you have zero. So we have zero. And it is what it is. But the last story to report, Nick, on my front was Kazakhstan mining exodus. There was a bunch of illegal miners in Kazakhstan, but they're actually using a lot of fossil fuels. So while they did get raided or they got shut down or whatever, and that hash power is taken from the network, it did make Bitcoin like instantaneously 4% more green. And it is expected that Bitcoin continues to really, and this is not me being ESG, it's just that Bitcoin really does utilize the cheapest and wasted energy. It's not really here for, it's not that fossil fuels can't mine Bitcoin, or there's not a way to probably rig a Bitcoin miner onto some of the fossil fuel sites or oil mining sites or things of that nature. But Bitcoin ultimately is here for the cheapest in energy that just gets wasted or unused energy. And we use fossil fuels. Fossil fuels is one of the best sources of energy we have as people because it is like good in the sense that it actually has some portability and storability.
And it's
Whereas a lot
energy
of other,
dense.
you're right, yeah, and a lot of other energies don't have any of that. You just mine it, and
You can
you
expend
have to use
the energy anytime.
right. So it's
Yeah.
it's a little bit different, but hey, pretty interesting. Bitcoin is green. Everybody can go to hell. I mean, it is what it is. Bitcoin mining is an energy revolution from an efficiency standpoint, but Bitcoin itself does not pick and choose which energy that it likes or does not like to consume. It consumes it all. So I'll leave you with that, but I don't know, man. That was about 9 stories, a lot of stuff happening on Bitcoin. There's always a lot of stuff happening on Bitcoin. There is other stuff in the ecosystem that is crypto, but this is not, and this will never be a crypto show. We will die on this hill. And if Ethereum ever becomes a thing, I won't buy it. I'll go be a farmer, and I'll just produce eggs, and you guys can pay me whatever I want, and I'll move on that way. The United States is treasuries. The United States is T-bills and bonds and how we interact globally, economies of scale, just how we do trade, all kinds of things factor into our global economy, but it is really all based around, a lot of people would believe, treasuries, which I know Nick has done a bit of research about and has a story for us. But I'm just going to let you run with that one, Nick, because it's very interesting.
Yeah. So I'll pull up this tweet here that initially made me think about it. And I've seen Dylan LeClaire post about this, several times previously, but this is from January 19th. So, 9 days ago. And he says, and here we go. and he posts this photo, and it shows the 10-year, 3-month yield spread on the 10-year note and the 3-month note, or I guess it'd be the 10-year note and the 3-month bill, I think. Anyways, they're all treasuries, but it's the yield. It's the yield on those and the spread between the two. And this has historically been used as a barometer of where the economy is and where it could be headed in the future. So he posted this photo, and it shows that yield spread chart up on top. So you can see the tech bubble burst in the 2000s, right? You can see how low the spread between the two went, and it actually went negative. And now I'm going to get into some more detail here in just a second. Here, I'm just going to break down this picture before we get into it. And then the same thing happens right as we enter the great financial crisis in 2007, 8, 9. Right, you see that spread go negative there as well. We see the same thing in 2019, right as we're kind of entering that weird COVID time. And look at where we're at today. So he shows this down here, and it's much further negative than it's ever been before. So you're thinking, ooh, what is this going to do? And then he also has a chart below this of the S&P 500, and he shows the price along with those times of the S&P 500. So it shows the tech bubble burst and the inversion there, the negative inversion there, and you see the market come down. The same thing is true with the great financial crisis. You see that inversion rate go negative. It comes way down low, and you see the price of Bitcoin or the price of the S&P go way down. The same is true we see with that COVID like flash crash almost, and there's no reason that we would think that the same is not going to happen when we see this again, right? And I've been posting a lot about this with one guy on Twitter, but the past does not dictate the future, but it can be used as a guide as to what may happen. And so I think that this story is interesting in a few different ways. The first piece is that an inverted 10-year to 3-month yield spread has historically signaled as a recession, that there is a recession coming in the near future. So that's piece one. Piece two is who in the hell would part with their hard-earned money for 10 years when they could get a greater return for parting with their money for only 3 months? Isn't that a weird thought? But let's start with that second one first, because I think this one's really exciting. Time preference, the degree to which we prefer today as compared to some point in the future, right? This time preference that we're thinking about impacts the decisions that we make day in, day out, decade after decade, right? This creates the generational culture that we create for our family, right? Just think of it individually, us for our family. Having a high time preference means you prefer the shorter term versus the longer term. Okay. This is what's being forced upon the people right now through this 10-year, 3-month yield inversion. Or at least it's an indicator that this is what is happening. So the 10-year to 3-month comparison is what is the yield on the 10-year note and what is the yield on the 3-month bill, and what's the difference between these two? Right. It's as simple as that. And there may be some more in-depth calculation here. So what is the comparison between the 10-year and the 3-month? Well, we first have to look at what treasuries actually are as we get into it. So treasury securities are just loans to the federal government. That's all that it is. Maturities or how long the loan will actually last. That's what maturities are when you think about what is the maturity on this treasury. That ranges from several weeks to as long as 30-year bonds, right? But these loans are deemed as extremely safe because of their backing by the United States federal government, right? This is how the federal government was able to the United States federal government was able to usher in the U.S. dollar as the world reserve currency. So it's seen as very safe. But the 10-year note specifically is used as a proxy for many consumer loans, such as mortgages or even commercial investment loans, which is pretty interesting to think about. A general rule of thumb is that you can add 2% to the 10-year treasury yield, and that should be near the consumer borrowing rate for banks, which is kind of interesting. So, side note on the 10-year, and I think I mentioned it earlier, the 10-year is seen as an indicator of investor confidence, just in the market generally. So when the price drops, because for those of you that do not know, the bond market is a little strange. One rule of thumb that you can look at whenever you're seeing, when you're looking at bond charts, is that prices of bonds and yields of bonds operate inversely. So when price goes up, yield goes down. When price goes down, yield goes up. So they just operate inversely. Well, right now, when the price of these bonds drops and the yield increases, the price drops because investors are finding better returns elsewhere in the market. And the opposite is true, right? When the price
returns as well, is the market also deeming things to be safer than bonds at this point? Or
I think that is partially what we could be seeing here. And now the shorter duration to maturity treasury bills, or T-bills for short, are more liquid than the longer maturity notes and bonds, right? So the shorter you get, right, the more liquid it is, just because you're locking your money up for less time. And you can't always sell early at a premium or a discount based on what it's trading. But these are generally held as a liquid dollar instrument in something like a money market account, right? It's the shorter duration loans. But otherwise, they operate the same, if not, extremely similar to the long maturity bonds. But here's the question: like, what does this actually look like? So I'm going to pull this up for you guys. I'm going to share my screen again here. If you guys aren't watching, we've got video on Spotify and on YouTube. Come check us out. So here is the spread here. It's the U.S. 10-year, 3-month spread. And we're looking at just a 1-month chart here. So you can see we're dropping from a high of negative 0.49 all the way down to our low right now at negative 1.17. But I'm just going to click here and expand this. So there's your 3-month, we've fallen. Your 6-month, we have fallen. The 1 year, we have fallen. The 5-year is kind of up and down, but you can look at how sharp this decline is from, when is this? May of 22 to now is an extremely sharp drop. Now let's look at all time here. And this kind of reflects that chart that Dylan LeClaire was showing in his tweet here. So right here is the 2000 is 1999, December of 1999, and this yield spread drops all the way down to 0.14. Continuing here, so this is 2006 at the bottom of this yield spread. Well, this is March of 2007 here, and your yield spread is at 0.22. Again, super close. And now we're all the way down. COVID drops down to 0%. We're at a 0%. Now that's December 18, so that's maybe a little before, but it shows, right? It kind of shows that hey, it seems like there's something coming, right? There's uncertainty, and now we're at an all-time low of negative 1.17%, which is crazy. So, kind of coming back over to some of my own personal thoughts. Those charts are pretty wild. It's got data all the way back to 1984. Around the time of the 1987 flash crash, they called that Black Monday. The yield spread went from 3.5% difference, right, to 0.11 in early 1989, and today it's at its lowest that it's ever been. What could that mean? I don't completely understand what it is that we're looking at and exactly how this works. From other things that I read, it's a notion that seems to say we don't have as much confidence in the Treasury. So we're not going to lock up our money in treasuries for a long time, but we do still need dollars, because we need dollars to be liquid and be able to buy and move around other assets, right? And that's why it seems like maybe people are moving from longer term treasuries, in this case the 10-year, to a shorter term, more liquid 3-month treasury, right? So it seems like people are getting more liquid and have less confidence in the treasury, which makes sense. But my final thoughts are this: time preference, short-term versus long-term. I think we're seeing a lot of signs of short-term thinking and action in the world right now, just in general. Desperate attempts at taking all control. We're seeing that by the government. And who in the hell would lock up their money for 10 years when they could lock it up for 3 months and get a greater return, right? Why would a 10-year note be yielding less than a 3-month T-bill? It's super weird. Everybody must be getting liquid is what it makes me think. But it makes sense based on what I'm seeing in the industry I work in. I work in commercial construction, and we're for sure seeing a slowdown in certain sectors of construction. So maybe people are getting uncertain into the future, right? But the bad part is, the bad part is that what they are getting liquid with and into is an asset that is eternally leaking value. I think that people are going to start figuring that out, whether it's here coming quick or whether it's longer down the road. But I think that people are going to start figuring out that this asset they're getting liquid into further increases their time preference and exacerbates their problem of not having sound policies and principles and operations. And I think that people are going to start flooding into sounder forms of money, and that'll probably be gold, that'll probably be Bitcoin, that'll probably be other things like that that store value that are not inherently based in a fiat system. But man, that was kind of some fun stuff to look into and read about on the inversion spreads. But Griff, do you have any thoughts on that?
I just got done ranting about how I don't like charts, but at the same time, I do like looking at them. They're very interesting things because, like Nick said, the future is the future. The past is the past, but you can learn from the past. And what happens now? I think the thing is, like, a lot of people are asking that question, but the markets haven't crashed to satisfaction yet, or there haven't been enough big players go down. How is this relationship related to the Bank of Japan? How is it related to the Chinese Communist Party? How is it related to other world governments and the fact that they own our debt? How does it relate to the fact that the United States only has about, give or take, $3 or $4 trillion in assets under management? And then you have to break down the fact that, do they even own those assets? They're a government that's supposed to be a constitutional republic. So what do they actually own in a country where we all have guns? So yeah, I mean, there's a lot of things up for question, Nick. I mean, I definitely don't doubt that. I think this was an informative Satoshi Saturday. I don't have any more thoughts. I learned a lot actually just from Nick. I'm glad that you just reported on that story. Batten down the hatches, everybody. Okay? Because my money's harder than yours, but if your money isn't harder than mine, times like this do get pretty hard for you. So that's all I got, Nick.
Absolutely. Stay disciplined, stack some sats, and we will see you next week. Peace.